A call with returnees. This is Adrian Essie Cook, and this is Returnee SANKOFA. Think your remote salary is safe just because your employer is in New York, London, or somewhere outside Ghana? Think again. If you live and work from Ghana, your tax obligations may not be determined simply by where your employer is located. If you're a diaspora returnee planning to earn foreign income while investing in property, starting a business, or building your life in Ghana, understanding tax residency is extremely important. Today we're breaking down remote work, Ghana tax residency, foreign income, tax treaties, and the question you need to answer before you make your move. Welcome back to Returnee SANKOFA. More people in the diaspora are discovering that they don't necessarily have to give up their foreign careers to live in Ghana. You can potentially live in Ghana while working remotely for a company in the United States, United Kingdom, Canada, or another country. But there's a major issue that doesn't get enough attention, and that's taxes. Where you physically work, where you consider a tax resident, where your employer is located, and where your income originates can all become important. And if you don't understand the rules before relocating, you could find yourself dealing with unexpected tax obligation. Your employer's location isn't the whole story. Here's the first misconception I want to address. You might say, my employer is in America, so I pay American taxes. Or my company is in London, so Ghana has nothing to do with my salary. It's not necessarily that simple. One of the most important questions is, where are you physically performing the work? If you're sitting in Accra every day with your laptop and performing your job from Ghana, your physical presence in Ghana can matter. That's why anyone considering a permanent or long-term move should understand tax residency before making assumptions about their income. What is tax residency? Tax residency is basically about whether a country considers you a resident for tax purposes under its rules, and this is where things get complicated. You may have U.S. citizenship, a U.S. employer, a U.S. bank account, investments in America, property in Ghana, and your actual day-to-day life happening in Ghana. Those facts don't necessarily point to only one country's tax system. Different countries have different rules for determining residency and taxing income. So don't assume I'm an American, therefore only American tax is me. And don't assume I moved to Ghana, therefore America no longer matters. You need to look at the rules for both countries. Ghana tax residency. For anyone considering a longer-term move to Ghana, this is one of the areas you need to investigate carefully. Ghana has rules concerning who is considered resident for tax purposes. The number of days you spend in Ghana can be important, but residency isn't something you should determine based on one number alone. Your circumstances matter. And this is why I recommend that returnees keep track of when you entered Ghana, when you left Ghana, how long you stayed, where you normally live, and potentially other factors relevant to tax situations. Don't wait until tax season to try to reconstruct your travel history. Remote work changes the conversation. Now let's talk about remote workers. Imagine this scenario. You're working for a company in New York. Your salary is deposited into your American bank account, but you move to Accra and perform your job from your home in Ghana. Your employer is still in New York. Your bank account is still in America. But where you are physically performing your work, that's the question you need to start asking. And depending on your circumstances, your move could have consequences involving Ghana income tax, U.S. tax obligation, payroll, Social Security and Medicare taxes, employer compliance, immigration status, foreign tax credits, tax treaties, reporting requirements. And this is why remote work and international relocation shouldn't be treated as exactly the same thing. What about tax treaties? Now we get into something many people hear about but don't fully understand. Tax treaty. A tax treaty is designed to establish rules between countries concerning taxation and can address issues such as taxing rights and relief from double taxation. But here's the important part. A tax treaty doesn't automatically mean you don't owe taxes. Sometimes the issue isn't whether you owe taxes. The issues determine which country gets to tax what income, under what circumstances, and whether you can receive relief for taxes paid elsewhere. That's a very different question, and this is where professional advice becomes extremely valuable. Don't confuse immigration with tax residency. Here's another mistake I want diaspora viewers to avoid. Your visa status and your tax status are not necessarily the same thing. A permit that allows you to live and work in Ghana doesn't automatically answer every tax question, and the reverse is also true. Having a tax obligation doesn't necessarily mean you have the correct immigration authorization to perform your employment from Ghana. You need to look at both sides, immigration compliance and tax compliance. They're related but not identical. What if you're investing in Ghana? This becomes even more important if you're not simply living in Ghana. Maybe you're buying land, maybe you're building a house, maybe you're purchasing an apartment, maybe you're starting a business, maybe you're buying rental property, maybe you're transferring money from your foreign bank into Ghana. Now you're dealing with another layer of financial records, and if this is why I recommend keeping documentation for your salary, bank transfers, investments, property purchases, business expenses, tax filings, foreign tax paid, Ghana taxes paid. You want a paper trail, because building wealth isn't just about making money. It's also about being able to explain where your money came from and how it is used. One of the biggest mistakes I see people make when planning a move is focusing on the cost of living and forgetting the cost of compliance. They calculate my salary is $5,000 a month, my apartment costs this much, food costs this much, I'll save thousands of dollars, but they don't ask what happens to my tax situation when I change my country of residence. That question should be part of the relocation budget. Before you move, you should understand your expected income, your expected tax obligation, your health insurance, your retirement contributions, your banking arrangements, your investment plans, and your immigration status. Your remote work Ghana checklist. Before moving to Ghana with a foreign remote job, here's the checklist I would want you to investigate. Where am I considered a tax resident? Where am I physically performing my work? Does my employer permit me to work internationally? What Ghana tax obligations could apply? What tax obligations remain in my home country? Does a tax treaty apply? Can a foreign credit or another form of release apply? What immigration permission do I need? Will my employer have payroll or employment law issues? How will my investment income be treated? What record should I keep? Do I need Ghana tax professional and a tax professional in my home country? The smarter way to approach your move. Instead of moving first and asking questions later, reverse the process. Plan first before you relocate. Talk to a qualified tax professional with both Ghana and your home country. Tell them exactly what you're planning. Don't simply say I'm moving to Ghana. Explain, I'm keeping my U.S. job. I'm working remotely from Ghana. I'm keeping my U.S. bank accounts. I'm purchasing property in Ghana. I'm planning to stay for this amount of time. I'm transferring approximately this amount of money. The details matter. The more accurate information your professional has, the more useful advice can be. Don't let tax fear you. And I don't want this video to scare anyone away from Ghana. Quite the opposite. The purpose is to encourage better planning. Ghana can offer tremendous opportunity for people who want to reconnect, relocate, invest, build businesses, or create another home. But successful repatriation requires more than finding a beautiful home and booking a flight. You have to think about financial infrastructure behind your new life, income, taxes, banking, property, business, retirement, insurance, and long-term financial planning. So if you're currently working remotely from America, Canada, or the UK, or another country, and you're thinking about moving to Ghana, don't wait until you're already living there to investigate your tax situation. Plan your relocate, because the goal isn't simply to move to Ghana. The goal is to build a sustainable life in Ghana while protecting the wealth you work so hard to create. If you found this information useful, please subscribe to Returnees SANKOFA. Give this video a thumbs up on the video and leave a comment below. And I'd love to know, would you consider living in Ghana while keeping your foreign remote job? Let us know in the comments. And let us know if you have any difficulties doing that or even some positive things or suggestions. Until next time, SANKOFA, go back and retrieve what is valuable.